Welcome to your regular market and investing program, the DLM Market Hub. Today we'll be looking at another aspect of the market, which is the over-the-counter market, otherwise known as the OTC. To discuss the value of this market and its impact on the financial market in Nigeria is Mr. Idowu Ogedengbe. He is the Executive Director, DLM Securities Limited. Welcome, sir.
Thank you very much, Otto.
Good to see you.
Same here. How are you doing?
It was great having you last week. We discussed about the market, especially the variations and the challenges that we've seen. And it's nice to have you again on this show to discuss the interesting OTC market.
It's nice to be here again, and I hope our discussion will be very incisive and also very informative today as well.
Now, if you noticed, last week there was the launch of the financial market dealers quotation of the OTC market. We'll get to that, but first I'd like to understand what the OTC market is all about.
The OTC market is a decentralized market, quite different from the regular or the conventional markets like the Nigerian Stock Exchange. It's a market whereby dealers trade through either telephone calls, emails, or other electronic trading channels, and it is not precisely located in a definite place. It's a market that is more or less like a virtual trading market where people just call and trade via various information technology platforms.
So indeed, it is designed to enable seamless trading in the market.
It's actually an alternative to the formal or regular conventional market, the Nigerian Stock Exchange, for example, whereby equities or bonds that are not listed on a regular stock exchange can equally be traded. And people who have investments or investors who hold such equity or assets can also be able to get the necessary information as regards to the asset that they are holding, be able to know the price at any point in time of those assets, price discovery,
okay.
And also if they so will or desire to sell or liquidate their investment, they will be able to find a platform to be able to do that. So the OTC market is just like the black market. Black market, the normal black market that you and I take our currency to whenever we need.
But this is like in a regulated.
But it's regulated and it's formal.
Okay.
It's formal, very transparent, and it has some sophistication.
In terms of technology
and applications and the platform through which you can execute your orders. So to that extent, we can say that the OTC market is a more formal, a more orderly, and a more sophisticated market that provides an alternative platform for investors to trade or to be able to transact on their portfolios, either with respect to equities, bonds, or currencies.
This is very interesting because recently Nigeria launched the NSE OTC version, and then last week, or like I said earlier, there was a launch of the financial market dealers quotation, and these are all designed, part of it, to improve liquidity, to improve trading operations, and of course deepen the market. So can you share with us the value of these launches, this different launch, the NSD and the FMDQ? What is going to bring to the Nigerian financial market?
Evidently, it is going to deepen our market. It's going to make our market also to be able to compete with similar markets across the world. Before now, we've had a market whereby there seems to be a dichotomy between the capital market and the money market. But with the launch, the money and the capital market, whereas both are segments or parts of the financial system, or the financial market, and if activity in one is not reflected in the other, it gives a distorted view as to what is going on in our financial market. But with the launch of both the NASD and the FMDQ platforms, as an alternative to the regular conventional trading platform like the Nigerian Stock Exchange platform, we'll be able to see traders price securities or assets across various markets, and there will also be an effective yield curve that would reflect activity within those segments of the market. It wouldn't be disjointed. It will capture appropriately the yield curve in both market, both either viewed from the money market or viewed from the capital market.
And so, looking at Nigeria as an emerging market, okay, we know that Brazil, Russia, India, China, South Africa are also the major emerging markets in the globe. After we have the sophisticated ones like US, France, Germany, and the UK. Would you say that the OTC market has come at the right time to the Nigerian financial sector?
I think it has. It has. If you look at some of the developments that have been taking place, we've gone through some learning process. We've been able to understand the workings of the financial market. We have more traders that are sophisticated in terms of the understanding of the various assets. And so I think it is just coming at the right time that given the experiences and the knowledge that we have garnered over the years and the various learning curve that we've had to go through, it's just appropriate at this time to start looking at how do we develop this market and how do we take this market to another level. And I think the launch of both the NSE and the FMDQ platform is just in the right directive. It's coming at the right time. It will deepen the market. It will enhance transparency. It will lead to a more sophisticated market, unlike what we have before now, whereby most of the trades that you see either on the currency end or the bond trading end is related and relatively limited to institutional trading. But what we are going to start seeing now is that we will see a wider segment of the market participating in those markets, and it wouldn't also still lose its sophistication. So we are going to have a very sophisticated market that will also be able to cut across a wider segment of the investing public, so that in that way we will be able to see a lot of activities going on in the Nigerian economy. Companies that either because they are unable to or unwilling to meet up with the listing requirements on the Nigerian Stock Exchange will find a platform, not necessarily to list their equity or their stocks, but they will be able to get a dealer or a broker to introduce them on either of these platforms and thereby facilitate, trading on those stocks without necessarily they having to list or meet with the stringent requirement of either the SEC or the NSE towards reporting on a quarterly basis, half-yearly basis. So this is one platform that companies who either do not meet up with those listing or reporting requirements or are willing to will be able to still effect trading on their stocks.
Wow, because when you said that the companies will be engaged more, there will be a lot of activities. So the market is about activities.
Basically.
And we've been really asking questions about all these major corporations in the oil and gas, the telcos are yet to be listed in the Nigerian Stock Exchange. What is really happening? So would this in a way encourage that you said they can do dealership?
They can actually be introduced without being listed in either of these platforms.
And that their activity will also increase
basically
in the market operations.
Basically. That is the whole idea. And if you notice that quite a number of these multinationals, because of the policies of their home country, they are not so much inclined to listing their shares on the Nigerian Stock Exchange. Because of the division of the overseas operation, they are not so inclined to listing on the Nigerian Stock Exchange. Take for example, recently NBC was delisted from the Nigerian Stock Exchange just because of the issue of their home country.
Yes.
But if they have an alternative platform like the FMDQ and the NSD, they could still have their stock or their shares being traded, actively traded, without necessarily being listed. So it will make the market to become more dynamic and more engaging. Activity definitely is going to be enhanced. So I look forward to a lot of activity going forward taking place in either of the platforms. If you look at the activity of the CBN at the open market operations last week, we could, in a way, try to figure out what the stance of the MPC most likely is going to be at their next meeting. If you recollect that the CBN governor had actually said that he wasn't foreseeing a change in the policy stance anytime soon. So to that extent, we should still be expecting the MPC to be kept, the monetary policy rate to be kept at 12%. And also last week, the CBN was very reluctant from supplying or basically filling hot market demand at above 12% in rate. So that in a way shows that the CBN also is not in any way willing to drive rates higher than 12%. And if we look at the expectations in the coming weeks, there's going to be a lot of injection of funds. FAC is going to be coming in. There's going to be government allocations and all this stuff. And to that extent, CBN might actually be holding back to expect the funds to come in before the next open market operation, and thereby it will not be under so much pressure to increase rates, rather to keep rate possibly below 12%, because there's going to be a lot of liquidity in the system.
You know, the expectations that rates should be kept lower would help to stimulate growth.
Definitely.
So are you seeing a variation by next meeting, a change of a slighter reduction from 12%? Is that what you're...
No, we are not precisely on the MPC, but maybe in terms of the rate on the at the open market operations. Not necessarily on the MPC, but the MPC is most likely is going to be kept at 12%. But really, if we were to look at what the economy needs at this time, I think it is appropriate for the monetary policy rate to be dropped, possibly slightly lower. And the reason is not far-fetched. If you look at the inflation rate, since the beginning of the year, it has actually been decelerating. From 9% in January, it fell to 8.2 in August. In September, it was 8%. And analysts are already forecasting that it may drop to as low, it may drop further to 7.79 or 7.7% for October. So we see a gradual decline in inflation, and to that extent, I think the CBN should, because the reason why the CBN always says is keeping monetary policy rate at 12% or possibly increasing the MPC, MPR, is simply because of the need to moderate inflation, have a stable exchange rate, and basically to ensure that there isn't any distortion in the economy.
Isn't that being achieved at the moment?
It's been achieved, but I think the CBN, the period by which the CBN will be able to assess the impact of its decision, particularly with respect to the exchange rate, is rather still very small. The CBN will want to still observe over a longer period so that it will be able to define or decide whether the impact of its decision or recent decision with respect to keeping MPR at 12% has actually led to a very stable exchange rate environment. And once that has been achieved, then the CBN might possibly consider the possibility of bringing down interest rates and thereby stimulating the economy, increasing employment, and basically enhancing productivity, because as we speak now, we need to really stimulate this economy.
That's been the thoughts, not just of you, but lots of analysts, stimulate economic growth.
Yes.
Thank you very much, Mr. Idowu Ogedengbe, for the time. It's been great having you.
Same.